Japan owns $1.18 trillion in US government debt. That's 12.4% of all foreign-held treasury bonds, more than any other country on Earth. And they're trapped, completely trapped. Because if Japan tries to sell those bonds, they crash the treasury market. Bond prices collapse, interest rates spike, and Japan's own $1.18 trillion investment becomes worthless. They destroy their own wealth trying to escape. This is the Treasury prisoner's dilemma. Own so much you can never leave. Japan is stuck financing America's debt forever. They're a hostage in the world's biggest financial standoff, and there's no way out. Let's rewind. How did Japan end up owning over $1 trillion in US debt? It started in the 1980s. Japan was an export powerhouse. Sony, Toyota, Honda, Japanese products flooded American markets. Americans bought Japanese goods with dollars. Japan accumulated massive dollar reserves.
Japan had established itself as a global manufacturing powerhouse.
The economy was growing so fast that it looked like it was about to overtake the US as the world's biggest.
But what do you do with trillions of dollars? You can't just hold cash. It loses value to inflation. You need to invest it somewhere safe, liquid, and large enough to absorb trillions. There's only one market that fits: US Treasury bonds. So Japan started buying. Billions became hundreds of billions. Hundreds of billions became $1 trillion. By 2024, Japan held $1.18 trillion in US government debt, the largest foreign creditor to the United States. And somewhere along the way, Japan crossed a line. They went from being a major investor to being trapped, because now they own so much that they can't sell without destroying their own investment. Here's how the trap works. Imagine you own 12.4% of a market. If you try to sell all at once, you flood the market with supply. Prices crash, your remaining holdings lose value faster than you can sell them. It's called the prisoner's dilemma in game theory. Each player's best move depends on what the other player does, but the optimal individual strategy creates the worst collective outcome. For Japan, the math is brutal. If they announce they're selling $1.18 trillion in treasuries, panic ensues. Every other investor rushes to sell before prices collapse. The market crashes. Bond prices plummet. Interest rates spike.
In Japan, over a fifth of the population are now over 70.
From the crowded streets of Tokyo, you'd never guess that Japan's population problem isn't too many people, it's too few.
Due to the labor shortage, the factory faced the real possibility of shutting down.
Japan's remaining trillion-dollar holdings lose hundreds of billions in value instantly. They're trapped in a burning building, and the only exit is through flames that will kill them. So they hold forever, because selling is worse than staying trapped. Let's talk numbers. What happens if Japan actually tries to sell? The Treasury market sees about $600 billion in daily trading volume. Japan trying to sell $1.18 trillion would take months, even years. And every day they're selling, the market knows it. Prices adjust downward. Other holders panic and sell. Treasury yields would spike. If 10-year Treasury yields jump from 4% to 6%, bond prices fall roughly 15%. That's $177 billion in losses for Japan on their holdings. And that's a conservative estimate. In a panic, yields could hit 8% or 10%. Losses could exceed $300 billion. But it's worse than that. Japan doesn't just hold treasuries. Their entire financial system is built on dollar-denominated assets. Japanese banks hold treasuries. Japanese pension funds hold treasuries. Japanese insurance companies hold treasuries. If the treasury market crashes, it doesn't just hurt Japan's government holdings. It destroys the entire Japanese financial system. Banks collapse, pensions evaporate, insurance companies go bankrupt. Japan can't sell without committing financial suicide. Now here's where it gets really dark. The United States knows Japan is trapped, and they're using it. Japan holds $1.18 trillion in US debt. That means they're locked into supporting American fiscal policy whether they like it or not. The US can run massive deficits, borrow trillions, and Japan has to keep buying or watch their existing existing holdings collapse. It's the perfect financial hostage situation. Japan can't leave, they can't diversify, they can't even threaten to sell because everyone knows it's a bluff. They're permanently committed to funding American government spending, and the US takes full advantage. Military bases on Japanese soil, Japan funds it through Treasury holdings. Trade disputes, the US has leverage through Treasury exposure. Any geopolitical disagreement, the US can implicitly threaten Treasury market instability. Japan is geopolitically constrained by its own investment. They're a creditor that has no power over their debtor. China used to be in the same trap. At their peak, China held over $1.3 trillion in US treasuries. They were the largest foreign holder, until they realized they were trapped. So China started slowly diversifying, selling treasuries gradually, buying gold, investing in Belt and Road infrastructure, creating currency swap agreements, building alternative financial systems. By 2024, China's treasury holdings dropped to around $800 billion. They're still trapped, but less so. They're slowly escaping the hostage situation. But Japan, they're not diversifying. Their holdings keep growing. They're becoming more trapped, not less. Because Japan's economy is fundamentally different from China's. They're a US ally dependent on American military protection. They can't antagonize the US by dumping treasuries like China can. Japan is stuck. Politically, economically, financially. Here's the final twist. Even if Japan never sells, they're still losing. US inflation runs at 3 to 4% annually. Japan's treasury bonds yield 4 to 5%. That's barely breaking even after inflation. And that's assuming inflation stays low. If US inflation spikes to 6 to 8%, Japan loses purchasing power on their entire $1 trillion investment. The US can effectively default on debt through inflation, print money, devalue the dollar, and Japan's $1.18 trillion becomes worth less in real terms every year. It's a slow-motion wealth transfer from Japan to the United States, and Japan can't do anything about it. Selling triggers a crash. Holding means slow losses to inflation. They're trapped either way. So what are Japan's options? Let's go through them. Option 1, sell gradually. Won't work. The market will notice. Yields will rise, prices will fall. Losses accumulate. Option 2, sell all at once. Financial suicide. Market crashes. Losses in the hundreds of billions. Option 3, hold forever. Slow death. Inflation eats purchasing power. Opportunity cost of capital locked in low-yielding bonds. Option 4, diversify into other assets. Where? The only market large enough to absorb $1 trillion is the Treasury market. Anything else is too small or too risky. There are no good options. Every path leads to losses. Japan is in a financial trap with no exit. But here's what should terrify everyone. Japan isn't unique. China holds $800 billion. European countries hold hundreds of billions more. Foreign governments collectively hold over $8 trillion in US treasuries. They're all trapped. If one tries to leave, they trigger a crisis that hurts everyone. It's a collective action problem. The first to sell loses the most. So everyone holds, hoping someone else doesn't panic first. It's the treasury market as mutual assured destruction. Everyone's locked in a standoff, knowing that any move triggers catastrophe. Japan owns $1.18 trillion in US government debt. That's 12.4% of all foreign-held treasuries, more than any other country. And they're completely trapped. They can't sell without crashing the market and destroying their own investment. They can't hold without losing purchasing power to inflation. They can't diversify because no other market is large enough. Japan is financing America's debt forever. Not because they want to, not because it's a good investment, but because they're stuck in the world's biggest financial hostage situation. The prisoner's dilemma doesn't just apply to individuals, it applies to nations. And right now, Japan is the prisoner. The US Treasury market is the prison, and there's no escape. Welcome to the Treasury trap. Population, every country holding US debt. Exit strategy, none.